Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about gas prices rising, the threat of a stock market crash, worsening inflation, why energy stocks are surging, and the top 4 stocks that I am buying while the stock market is pulling back right now. For more videos like this one, remember to go and smash that like button right now, subscribe if you are new, and without further ado, let's jump right into today's video. So if you didn't know, President Biden said the US will ban Russian imports of both oil and energy, and this move could raise gas prices even higher and also worsen inflation. This is also going to increase the fears of a potential recession and a stock market crash over the economic consequences due to the war between Russia and Ukraine. We have already seen that some of this fear is apparent from the indices pulling back, such as the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite, because all 3 of the indices have moved back and extended their losses from the sell-off from the beginning of the week, and the Dow Jones specifically is actually falling into more of a correction territory, while the Nasdaq is actually about to enter a bear market. So a potential stock market meltdown is plausible. However, we shouldn't get too ahead of ourselves because if anything, this should just make us double down on our high conviction plays, especially safer plays such as ETFs, blue chip stocks, and dividend stocks. And we will go over 4 dividend stocks at the end of the video that I personally am buying while stocks are very cheap right now. Meanwhile, energy prices have skyrocketed because Western nations will actually start to be more self-reliant instead of using Russian energy, and this is why we have seen many energy stocks as of late absolutely skyrocket, because the total addressable market has expanded for those particular companies. Specifically, the United Kingdom is also expected to phase out imports of both oil as well as some natural gas products from Russia by the end of 2022, mimicking what the United States is doing. The chief investment officer of Banson Group actually said that surging oil prices can't singularly trigger a recession, and it would take more than sky-high energy prices for the consumer impact to become recessionary. And I 100% agree with this. Investors shouldn't start to panic as if we're going to go into a bear market, and although that is plausible, we are not there yet, so we need to take it one day at a time and make wise decisions that is going to bolster our portfolio and help us out in the future. The CIO goes on to say, the big question now is what are the plans to replace Russian oil in America and European supply needs, and then how effective an embargo may prove to be in de-escalating the military situation in Ukraine, end quote. To put this into perspective, Russian energy products currently comprise almost around 8% of the total petroleum imports for the United States, but on the other hand, European countries rely way more heavily on Russian crude oil and these types of natural gas energy products than the United States does. This is going to also cause crude oil futures to absolutely skyrocket because we've already seen crude oil futures rise to around $124.12 per barrel, and we've also seen the prices of multiple commodities such as wheat, gold, and nickel, specifically gold futures, remaining above $2,000 per ounce after hitting their highest level within the last 18 months. The CIO goes on to say, while oil prices could rise above $150 per barrel and well beyond that, the key question for investors is not what price oil could reach, but what price oil could be sustained at. The price that oil will settle at will carry the most economic ramifications. And of course, this is correct. Whatever the price ends up settling on, that is going to be the biggest problem because that is going to have the most economic impact over the long term. Another problem is that this could also escalate inflation. So due to the crisis over in Ukraine, it has raised worries in the global trade markets, particularly regarding supply chain disruptions, which could push inflation to become even higher. And with inflation increasing, that means you wouldn't want to have a lot of cash on hand, and it needs to be invested into assets that generate income, such as dividend stocks, or even preferably an ETF that also pays you dividends. Some of my favorite ETFs being MTUM, VOO, and VTI are always the classic go-to ETFs in my opinion. On top of this geopolitical turmoil, it's also expected that the Federal Reserve is actually going to take a less aggressive pump in interest rates because originally they they were forecasting around a 50 basis point rate hike for interest rates to get inflation under control. However, recently they've said that they're going to increase it by around 0.25% literally this month. So hopefully this can combat some inflation. And although interest rate hikes are actually good at combating inflation, the problem is that they don't want to shock the market too much, especially considering the current market environment. It's extremely fragile right now. So what stocks are going to be good buys to hold through this market volatility? Well, the first one that I would point out is Johnson & Johnson, ticker symbol JNJ, which is a legacy healthcare company that develops fantastic medical devices, various pharmaceuticals, consumer packaged goods, and a plethora of other things. And I also like how this company has been around for over a century, which is no surprise because it's literally one of the world's largest and most broadly based healthcare companies in the entire world. They've also entered into multiple talks with other healthcare giants, specifically two Chinese biotechnology companies. But in even better news, the company has successfully collaborated with Legend Biotech, ticker symbol LEGN, and the two are going to work together to make cell-based cancer therapy treatments. That was approved by US regulators last week, so that is a fantastic recent catalyst. The current J&J stock price trades for around $168 right now, while the bullish price target among analysts over the next 12 months is $215, and it has a fantastic dividend yield of around 2.46. So overall, this makes Johnson & Johnson a fantastic blue chip, safe company to invest in that has decent growth and a strong dividend, which could hold us through market volatility that we're experiencing right now. The second company that I would point out is Diamondback Energy, ticker symbol FANG, ticker name FANG. And the reason for this is because as countries become less reliant on Russia, they're going to have to become more reliant on other energy companies, such as energy companies in the United States and abroad, and this is going to be very good for energy stocks such as FANG. This company is an independent oil and natural gas company that mainly focuses on the acquisition, development, and exploration of oil and natural gas products. It's based in West Texas, and in the fourth quarter, they had amazing revenues, bringing in around $2.02 billion, which is a fantastic increase from a year ago where they brought in around $769 million. So clearly this company is still expanding and growing, and this current market environment is going to be fantastic for them. The current stock price trades for around $134 per share, while the high-end analyst price prediction over the next 12 months is $195, with them having a strong dividend yield of around 1.3, which is also fantastic. The majority of the revenues for this company is clearly derived from its oil, natural gas, and natural gas liquid sales, and it also has strong profits because their adjusted earnings per share came in at around $3.63 in the last quarter, which actually beat analysts' estimates for the stock because they were forecasted to only bring in $3.38. They've also increased their annual dividend by 20% to $2.40 a share. And this year, the company anticipates to generate about $5.8 billion worth of net cash provided from their operation activities this year. So overall, a fantastic company, and this current market environment is actually good for energy stocks such as Diamondback Energy. Next, we have Coca-Cola, ticker symbol KO, and this is another staple company that should be in the majority of people's portfolios depending on your investment strategies. Johnson & Johnson's a good one, and Coca-Cola is also a fantastic company because this is a beverage company. This company makes sparkling soft drinks, water, sports drinks, juice, and even plant-based beverages. They have also recently increased their dividend for the 60th year in a row, which means that it has risen its quarterly dividend by 5% to 44 cents per common share of stock, which is really good, getting 44 cents per share every single quarter. Currently, the stock price trades at around $58 per share, while the high-end analyst price target for the next 12 months is $76, with a very strong dividend yield coming in at 2.75. Again, this is another fantastic blue chip company to own, and overall it's a fantastic strong company fundamentally as well as financially, and it has a good dividend. Lastly, I want to highlight the Home Depot, ticker symbol HD, which is one of the largest home improvement companies in the entire United States. This company carries building materials, home improvement products, and of course construction tools. HD stock currently trades at around $316 per share, but the high-end analyst price target goes all the way up to $470 with a dividend yield of 2.05%. 104, which is very strong, especially with a company that has such high growth such as Home Depot. What I mean by this is that in their most recent quarter, their sales jumped up to around $35.7 billion, which is a $3.5 billion increase if we compare that to the same quarter of last year. Their earnings per diluted share were $3.21, which is also a fantastic increase from only $2.65, which it was for the same period a year ago. So clearly HD stock is solid and the Home Depot company is fundamentally very sound. They have fantastic growth and a high dividend. So that would conclude today's video. Remember to go and smash that like button for more videos like this one. Subscribe if you are new. Comment your thoughts down below and I will see you in the next YT video.